Let's get started. My talk today is going to be about how to profit from the stock market trends in less than 30 minutes per month. I know this sounds bizarre, but that's what we're going to do. I just want to let you know I'm not a financial advisor, but I do have one, and I recommend that you do too. Investing is a risky business, and I don't recommend or sell securities and only offer my investment expertise, experience, and insights through newsletters available at bobstocks.com and nothing more. Bobstocks.com is owned by Waterstone Strategies Incorporated. I'm going to teach you this by showing you how I use universal patterns within the stock market to make accurate predictions, and how you can look over my shoulder to help yourself learn how to be a better investor. Okay, let me tell you a little bit about myself. I'm known as the stock market weather forecaster who accurately predicts profitable trends and helps people make more money in the markets. I'm the creator of Bob's Stock Market Weather Forecast. You may ask, why the weather? Well, for the past 20 years, I've completed 34 predictable trends, and I've turned them into my model method, which allows you to profit from all my years of experience in as little as 30 minutes a month. As I said, I'm not an investment advisor, but I am an investor, and I am a weather forecaster. In fact, for more than 30 years, I've been a lead weather forecaster, and I've worked for institutions like the National Center for Atmospheric Research and the NOAA Weather Service, National Weather Service. Here's what you're going to learn during my presentation: how to understand patterns so that you can apply them to your investing goals, how to look over my shoulder without having to spend years learning what I have so that you can enjoy similar benefits as I do today, and how to avoid costly mistakes and rest easy so that you can better meet your investment goals. The new way to help manage your own stock investments is about to begin. Why is this important to you now? Well, most conventional wisdom we've learned is dead wrong. People have been sold the concept of buy and hold, and this has led to very poor investment performance since 2000. The market has changed, and so should you. Is this for you? If you're not a financial advisor, this may be for you. If you are a financial advisor and you want a new tool, this is for you. If you're a successful individual and want to become a successful investor, then this is for you. If you're nearing retirement and want or need to increase your retirement asset base, then this is for you. If you're open to a model that has outperformed the market for the past 14 years, this certainly is for you. My prediction: this is definitely for you. So here's the house rules. This is not a get rich quick scheme. It's a get rich slowly method. It's not labor and time intensive. However, it is time effective. There are no fake experts here. My track record is highly documented. And my results aren't remotely typical. Most people who invest in the stock market perform worse than their broker does. For example, I gave mine a bunch of money every year to see if he can beat me, but I beat him. I'd like to show you how. Here's my confession. Yes, I have the advantage of over most people because I have 20 years of experience in this craft. My frustration, however, arose from my first broker losing quite a bit of my money. I was even paying him to do that, and it was absolutely frustrating to be a scientist and not be a good investor. I tried a second broker and a third, and yes, I didn't learn. Guess what? I had the same results. Admiring Albert Einstein, who said, "The definition of insanity is doing the same thing over and over again and expecting different results." So, being an atmospheric physicist myself, I decided it was time for a change, and most importantly, that no one, and I mean no one, cared about my money as much as I do. I hope you feel the same way about yours. This was a turning point for me. I decided to use my expertise and track record in predicting weather and climate patterns and apply them to the stock market. It certainly wasn't an instant success, and I made a lot of poor decisions, but I was committed to achieving better results for myself. It turns out there are universal patterns that not only apply to weather, but also apply to the markets. There wasn't just one pattern, there were many, I soon discovered. It then became obvious to me how patterns become trends, and understanding trends can be very profitable in the stock market. The roadmap, over time, I found 34 patterns that, when strung together in unique ways, determine the trend. 20 years of digging, and I put them into what I call my model method. Well, I would say holy mackerel generally, but eureka is okay. My results were so consistent and above average that friends, colleagues, and family all began asking how I was doing it. My results are on the next slide, and it will make clear why they were so fascinated. So here is my track record for one of my strategies since the 1st of January of 2000. My model portfolio at that time was $100,000, and since then there have been 5 trades over 14 years, and that $100,000 grew to $352,712. If you want to know what the latest model signal is, you can become a member of bobstocks.com. Let's look at this table of my results for the most simplistic of my 4 strategies when applied to the charts. So here's the S&P 500 index from January 4th, 1999 to March 3rd of 2014. The green arrows indicate where the signals occurred. There was a buy immediately when we started using this model method on 1/1 of 2000. The blue, a sell on 3/28 of 2000. A buy on 3/28 of 2003. A sell on 2/29 of 2008, and a buy signal on 10/31 of '08. And you can see that by having those buy and sell signals, we captured most of the uptrends and missed most of the downtrends. That's why, with these 5 easy signals to implement, we were able to make over 350% on our money since that point. That's pretty good, I think. At first, I was hesitant to share how I do this, but I'm a college professor now, so I fully believe the path to really great success is to share ideas that can make a difference. Since October of 2011, I've been sharing my method with a select group of individuals, and now I'd like to share it with you. Now for the good stuff. Get ready to take some notes. I'll give you a second to grab a pen and paper. So here's the 5 pillars of successful investing. Number 1, question conventional wisdom. Number 2, nature is a series of repeatable patterns. 3, Understand the probabilities patterns have, and that allows you to create skill in investing. 4. Leave your emotions out of the equation. 5. Be very critical and analytical. Sounds easy, but it isn't. So let's talk about conventional wisdom briefly. Conventional wisdom says average people aren't smart enough to invest their own money. That you should focus on buy and hold strategies that used to work. That no one can predict the markets to any degree of accuracy. And that your money is safer with someone else controlling it. Remember, no one cares about your money more than you do. Why should you question? Well, the masses aren't outperforming the stock market, so don't do as they do. Most investors base their investments off the news, which is another mass control tool. Most of your wins will come from getting the trend right, not from choosing stocks. This is very important. If you question conventional wisdom and your own actions honestly, you'll outperform the markets like few do and make more money. Number 2, nature is a series of repeatable patterns. A good friend of mine, and we go way back to the 12th century, Italian mathematician and discoverer of the Fibonacci sequence, Leonardo Fibonacci. Well, I'm half Italian, so I liked this guy when I met him. He discovered the Fibonacci sequence, and here it is. The key thing looking at these numbers is you take the second number in and you add it to the number to the left. And if you add 0 and 1, you get 1. Now do that again. 1 plus 1 is 2. 2 plus 1 is 3. 5 plus 3 is 8, and so on. Now here's the cool thing. If you divide 144 by 233, you get 0.618. If you divide 233 by 144, you get 1.618. In fact, if you divide any two numbers by the other, you will get either 1.618 or 0.618. Now that's a remarkable sequence. This one simple pattern is the foundation of so much in nature, human life, and thus the stock market. Think of a perfect triangle. Those are Fibonacci triangles. Think of a line. You break it into two segments, 0.618 and 0.382, and that equals the whole length of the line. Let's look at some examples. For example, the fern up in the top left-hand corner is a Fibonacci spiral. Paula Zahn, who is, I think, one of the prettiest ladies ever to do the news, if you look at her facial ratios, they're all Fibonacci ratios. The lines are all 0.382 and 1.618. Cauliflower, to the top right, is a Fibonacci spiral. Then down on the right-hand side, that's DNA, a double helix, also a Fibonacci spiral. And then look at the sunflower. That's the same. And in the middle, that's Hurricane Sandy, as it hit New Jersey a few years back. And I put on top of it the Fibonacci lines that are all 0.618 and 1.618. And as you go out from the center, you can see how the squares build in size. And if you connect them, the radiuses of all those squares, you end up getting the Fibonacci spiral. Now going to the left, do you see that spiral in that seashell? And do you see it in the Milky Way galaxy? It's all the same. Here's some more examples. This is the Parthenon. Back thousands of years ago, when the Greeks built this magnificent building Do you notice the top of the building? A perfect Fibonacci rectangle. Also, notice the Fibonacci squares. Look at the bottom line. 0.618 and 0.382 makes the base of the Parthenon. And if you look at all the ratios of the columns, the decorative area above the columns, and then the triangle on top, they're all Fibonacci sequences. And even Leonardo da Vinci got it early. He created the Mona Lisa in perfect Fibonacci perspective. So now let's apply this to the stock market. Remember, 3 and 5 are Fibonacci numbers. This is a bull market pattern starting on the left. Notice 1, 2, 3, 4, 5. That's the first part of a pattern. And if you see that 1 and 5 are of equal length, and 3 is 1.618 times 1 and 5, you realize that this is also a sequence in the Fibonacci, uh, um, in the way Fibonacci would do it. 2 and 4 are corrective patterns, and they roughly correct 0.382 of the previous advance. Once you get to the top of 5, you'll see an A, B, C down, or a 1, 2, 3. That's a corrective pattern. When you have a 5 and a 3, that makes 8. And onto that, you can add 5 more, which makes 13. That's a bull market, my friends. If you turn it upside down, which is what I did on the right-hand side, you'll see it's the same pattern, only in the downward direction. So this is the main pattern of how I do stock market forecasting, but these patterns are not always obvious. This pattern is deeply nested within the chart I showed you earlier, and one of the key factors I use to determine when I buy and when I sell. So let's look at it again. Here's the sequence as it was shown earlier, just so that you get to see the pattern. You'll notice that we have a downward trend, an upward trend, a downward trend, and an upward trend going on right now. Remember, these 5 trades I made produced over a 340% return since 2000. The important takeaways are: patterns become trends because they repeat. Those sequences repeating are patterns, but when they string together, they become trends. Pattern and trends are chaotic, but mostly predictable, except for black swan events. These are events like 9/11, for example. Positive skill in predicting trends equals a high probability of success and high profitability. On to number 3. Understand the probability of all the patterns. There are 34 that I've identified. The main pattern I just showed you is only the first. Most people stop using only this pattern, and thus they can achieve erratic results. We want to improve your accuracy by combining high probability patterns into predictable trends. So here's some patterns to keep an eye out for. There's a flag, a cup and handle, and a head and shoulders pattern. I'm sure you've heard of some of these before, but they must be combined correctly. I call this high probability sequence. When you sequence correctly, you get not only the pattern right, but the trend correct, and that can lead to outsized profits. Remember, patterns when combined in specific high probability sequences creates trends that allows one to predict the markets with increased accuracy. And accuracy is what it's all about. The 5 steps I use to understand probabilities, and remember, I'm a weather forecaster, so I know something about probabilities, is number one, observe the trend based on the patterns I know. Next, I trade on what I know, not on what I feel. That's a key one. Number three, track the trend. Was the prediction correct or not? Number four, take note of the patterns used to make the prediction, and then at the end of the whole sequence, refine if necessary and try again. So there is some trial and error in this, and this is how we get good at what we do, because nobody hits a home run the first time at the plate unless they're very lucky, and I really don't believe in luck. Now, to some, that may sound like an absolute headache. And trust me, there were a lot of headaches and heartaches during the 20 years that I was learning. But I stuck to it, and now my model works very well. Thanks to my persistence, I've learned how to combine each of the 34 patterns to predict major trends and have profited from that. Don't worry, in just a few short minutes, I'm going to show you exactly how you can use the model method I've developed and do the same. Whew. After all, I promised you how to improve your investments in 30 minutes per month, not 20 years. Don't worry, I got you covered. Okay, as I said, leaving your emotions out of the equation is really a very important part. Trade based on what you know, not based on what you feel. This is where 99% of investors crash and burn. And way back when, I was one of those. Buy low, sell high. If only humans were rational creatures. Here are some big emotional mistakes. Trading more than you should because you feel it's the right call. Trading more than last time in order to recover your losses more quickly. Trading when others are excited about a stock and you haven't applied any rational patterns to determine the trend. Holding on to a loser because you feel it'll turn around even though the trend tells you otherwise. I think you get the idea here. And this leads into our final pillar. Be very critical and analytical. When you leave emotions behind, you're able to be critical about your trades and analyze your results. This is how we learn. If you're not analyzing the patterns, tracking the trends, and being critical of your results, then you're flying blind. And that's not a good idea. I don't want you to do that. Instead, I want to help you achieve significant improvements with very little time and very little effort by leveraging what I know. Now let's talk about you. You're at your computer watching this webinar, and you've stuck with me so far. You've heard how this works, and you know now it's quite possible to improve your investments and perhaps beat the market averages. So if you're someone who really wants to improve your returns and add some sunshine to your portfolio, you might be wondering how you can implement the same strategies I've formulated over the last 20 years quickly and easily. Everybody knows that an essential key to lasting wealth is to invest your hard-earned money and make it work for you. Just look at how wealthy individuals continue to grow their fortune. That's why you're smart to improve your own investment skills and create long-lasting wealth for you and your family. You also know there's no magic pill to investing. While I can take away most of the work, you still have to be involved to make yourself successful. But you wouldn't be here if you didn't have the work ethic and desire to improve your returns. Okay, listen, I'm not going to get you all hyped up and try to get you all excited about my model method and how this can help you. You've listened to me, you've heard my story, and you see the experience and the tools that I have that can help you. So what I want to do is just go over exactly what Bob Stocks members receive and how I can help you. And if it's right for you, then I want you to get it. If it's not right for you, I don't. I'm going to do this without fanfare. I'm going to do this without hype. So here's what it is. What I've just showed you are the concepts behind my methodology. I've used it for over 20 years to create my model for predicting trends. And if you'd like to look over my shoulder and use this experience, I'd be delighted to share it with you. Here's what I have for you. I've created a special group for action takers like you who want to use my model. Bob Stocks members. So if you want simple strategies, 20 years of experience to help you, improved returns, capital appreciation and income, all in less than 30 minutes a month, then this is specifically for you. Here's how we'll do it. On my website, there's a private member area. You will have access to all the archives, all my published newsletters and updates. There are two newsletters. The first one contains 3 capital appreciation strategies. The second newsletter contains 1 income and capital appreciation strategy. I also issue special updates when trends change. Notifications are sent straight to you by email, and then you can log into the website and read the special updates. There's always detailed trends analysis, the most profitable education I believe you'll ever receive, and this will help you create wealth for your life. The member areas archive. You have access to the background and methodology behind my model, so you can accelerate your own ability to learn this profitable new method. You'll also have access to all past newsletters, so you can learn how I use patterns and probabilities to improve my returns. You can see every forecast going back more than 2 years and learn from them. You'll have access to my special updates so that you'll know what to look for to spot trend changes and even more opportunities in the market that you can see for yourself. The Bob Stock Market Weather Forecast newsletter gives you access to the 3 capital gain strategies so that you can grow your wealth in a variety of ways that outperform the market over time. The Dividend Plus newsletter gives you access to my new income strategies so you can grow your wealth while creating significant income. And the special updates give you the urgent news as it occurs in the markets when major trends are changing, so you can reposition your investments to ride profitable waves and avoid major crashes. Detailed trends analysis. Within each newsletter and each special update, I make sure to give you the detail that what the most likely patterns are in trends analysis and the reasons behind my own decisions, so you too can add the model method tool to your investment toolbox, and you too can learn by looking over my shoulder. This is not your average newsletter. This is education to help you create wealth for your life. You are getting to look over my shoulder. This is a good thing. The model I use to make 340% over the past since 2000 with only 5 trades is what you're going to see and what you're going to experience and what you're going to see in the future. And of course, I continue to use and improve this model as I too am still learning. So you can be more consistent in outperforming the market and with much less effort. The price, I'm giving you the 20 years of investing shortcut. I'm giving you my strategies I personally use to outperform the market, and I could easily sell it for $8,000 per year. However, I want to make it affordable. At a minimum, I should be charging $1,000 per strategy or $4,000 per year, but I think that's still too high. So I settled on $29.95 per year, which you can see by clicking the subscribe tab on my site. However, I do reward action takers, and you wouldn't be here if you weren't ready to take action and improve your investments. In addition, your time is valuable. So to show you my thanks for attending, I'm offering Bob Stocks members access for $24.95 per year. That's $500 off the current price on my site. And you can see that bobstocks.com/special. Here's what to do next. Scroll down and click the yellow continue button. Then you will be taken to PayPal. You can pay with credit card or your PayPal balance. You will be sent a thank you with the page of video and instructions on it. Follow them and you're into the website. So remember, if you want simple strategies, 20 years of experience, improved returns, capital appreciation and income, all in less than 30 minutes a month, then visit bobstocks.com/special. In addition, you'll get 30 minutes of my time, so you can ask me any questions about my methodology and learn straight from the source before jumping into the members area. Again, bobstocks.com/special. Okay, let's recap. Full members access, 30 minutes on the phone with me for $500 off my normal pricing if you were to click subscribe on my site. Warning, this is only good for the next 5 days only, and then the price reverts to $29.95. This special price will be removed 5 days from now. So here's the deal. You've watched this entire presentation. You want to improve your investments with little time and effort, and you know this is an excellent value. So take advantage of this incredible time-limited discount and my bonus 30-minute call. And if you're still not convinced, here's some examples of how my members have greatly benefited. On February 12, 2013, I made a special public prediction on my Facebook page for Tesla. As many of you know, it's way beyond 38 now, where this recommendation showed on Facebook. The recommendation was to illustrate a very powerful pattern. My members were very pleased when I made this call. If you look at this, you can see that I said much higher prices were ahead for this automaker. Tesla hit $250 a share within 1 year of this call. For strategy 2, I told my members in January 2013 in the newsletter that I was buying Facebook at $28.76. I don't want you to miss big opportunities anymore. And more importantly, I don't want the next big correction or crash to take you by surprise. Go to bobstocks.com/special and become a member. I'll see you on the inside. And now for questions.